Welcome to Looking at the Markets with David Modell. Today I would like to explain to you a number of types of orders. Market orders, limit orders, and a couple of other ones, including stop orders and stop limit orders. When you buy or sell shares of a stock, you might be asked what type of order you want to place. The most popular types of orders are market orders and limit orders. Sometimes you might also have other choices, such as stop orders or stop limit orders. I'm using terms according to the broker Schwab. The terms might be different for you depending on which broker you're using. Market orders are the easiest type of order to make. You basically just hit the buy or sell button and your order will usually get filled immediately. There's no thinking or math involved. This sounds great until you understand that you're probably not going to get the best available price. In other words, you could get ripped off a little bit, or more than a little bit. With a market order, you're basically just telling the market, fill my order immediately and give me whatever price you think is right. It's kind of like buying a used car and just handing a blank check to the used car salesman and saying, just give me the car quickly and charge me whatever price you think is appropriate. When you use a market order, you're not setting any limits. I believe that if you're going to haggle and get a good price, you've got to set some boundaries or limits as to what you will and will not accept. That leads us to the next type of order, limit orders. With limit orders, you're establishing a limit price, the price that you specify at which you'll buy or sell shares of stock only at that price or better. If you use a limit order to buy shares, your order will only execute at or below your limit price. If no one is willing to sell shares to you at that price or below, your order simply won't get filled. If you use a limit order to sell shares, your order will only execute at or above your limit price. If no one is willing to buy shares from you at that price or higher, your order simply won't get filled. So limit orders require some thinking, and they have some risk that your order won't be executed. However, at least you won't get ripped off with an unfavorable or unexpectedly bad price. Stop orders and stop limit orders are more complex, but they're worth learning about. With stop orders, you will need to provide a number, which is your stop price. If the price of the stock reaches that stop price, which you provided, the broker will enter a market order. Then, just as with any market order, your order will probably get filled immediately, but at whatever price the market decides to give you, which might be an unfavorable or unexpected price. If you buy shares with a stop order, it will turn into a market order if the stock trades at or above the stop price which you provide. If you sell shares with a stop order, it will turn into a market order if the stock trades at or below the stop price at which you provide. Some people use this method to create a stop loss order. And if you don't know what a stop loss order is right now, don't worry about it. That's a separate lesson. Because the stock price might not reach your stop price, there is the risk that your order will not be executed. With stop limit orders, you will need to provide two numbers. The first number is your stop price. If the price of the stock reaches or passes that stop price which you provided, the broker will then enter a limit order. That's why you have to enter the second number, which tells the broker what price you're willing to buy or sell the stock at. And that's the limit price. It's kind of like this. If the stock price reaches or passes blank, create a limit order in which I'll buy or sell shares at blank or better. If you buy shares with a stop limit order, you provide a stop price, and if the stock trades at or above that stop price, the broker will then create a limit order to buy at a particular price, which you must specify, or better. In other words, you're entering two numbers. First, your stop price, and then your limit price. All right. What if you're selling shares with a stop limit order? Well, if you sell shares with a stop limit order, you provide a stop price, and if the stock trades at or below that stop price, the broker will create a limit order to sell at a particular price, which you must specify, or better, and that's your limit price. I believe that this is an effective method of creating a stop-loss order. I believe it's more effective than just a stop order, because a stop order, if it reaches a certain price, becomes a market order. And so then the price is kind of out of your control, as it is with market orders generally. With a stop limit order, at least both prices are totally controlled or specified by you. Both the stop price at which the order would get triggered, and then the limit price at which you're willing to buy or sell at that price or better. Once again, because the stock price might not reach your stop price, there is the risk that your order will not be executed. And this is true, the possibility of your order not getting filled. That's true with all the types of orders we mentioned today, except for just plain old market orders, which we spoke about at the beginning. With a market order, you're going to get filled immediately, or at least very, very quickly in most cases, if there are enough shares being traded. But again, you're probably not going to get a very favorable price. You might get a reasonably favorable price if there's plenty of shares being traded, like with Apple stock, for example. You'll probably still get a pretty good price with a market order. All right. But even with Apple or something like that, in which there is a lot of volume, a lot of shares traded, I'll still probably put in at least a limit order, because I'm going to set my boundaries. I'm not going to, personally, I'm not going to, in most cases, allow the market to decide what price I'm going to get. And I'm willing to take the chance of my order not being filled, because I don't put myself in positions where I'm desperate to fill an order. And that's why I use limit orders. Oftentimes I'll use limit orders to buy and to sell. But if I want to create a stop loss order, then it will probably be a stop limit order. So that, let's say I buy shares of Apple, let's say Apple stock, all right? I might use a limit order to do that. And that way I'll get filled at my price. Now, let's say if I'm using stop-loss orders, and again, if you don't know what a stop-loss order is, then you don't have to listen to this part of the video. And let's say I'm putting in but if I do want to create a stop-loss order, then I'll probably make it a stop-limit order, all right? And once again, with stop-limit orders, I'm entering two prices. The first one is telling the broker if Apple should go down to this particular price, now create a limit order. And the second value, the second price that I'm entering or providing to the broker is saying, okay, only sell my shares of Apple stock at this limit price, the second number that I'm entering, only sell my shares of Apple stock at this price or better, meaning this particular price that I'm providing or higher. All right. That way, my losses truly are limited. I'm not allowing the stock price to just go down and down until I get a really horrible price, and then I'm giving away my shares of Apple stock for a very, very low price. All right. Yes, it is true that stop limit orders are the most complex ones. You have to enter two numbers, two prices. But once you get used to it, it starts to make more sense. And so if you have a broker that allows you to paper trade or virtual trade, you can try it out with that. And you can get used to it until it becomes more natural and easier for you. If you're just starting out and you're trading or investing in stocks with plenty of volume, lots of shares bought and sold on a daily basis, then you might just want to start with market orders, I suppose, because it's the easiest. But even then, you know what? Even if you're a beginner, you should at least be able to handle limit orders so you can get used to it and you can have some control over where you buy it, where you sell it, that kind of thing. All right? And if you are willing to learn about stop orders, or better yet, stop limit orders, because again, with stop orders, you're really entering a market order if it reaches a certain price. and I'm not a huge fan of market orders in most instances, then I believe it's worth your time to learn about stop limit orders. Now again, these are terms used by Schwab. The terminology and the definitions might be different depending on which broker you're using. Okay, so my name is David Modell, and my email address is davidmodell@gmail.com. If you have questions, if you want help with these things, the first people to help you really should be the broker that you're working with, and to tell you exactly what terminology they're using and what the definitions mean. But if you just want general help, you can contact me anytime. My email address is davidmodell@gmail.com. I can also help you to put together a trading or investing plan, and just to help you with buying and selling stocks and things like that. If you like this video, please give it a thumbs up on YouTube and leave a comment, and subscribe to my YouTube channel and hit that bell on YouTube so you can receive the latest updates on my financial educational videos. Thank you so much for watching and listening, and I'll talk to you again soon.